Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. Dennis and I are joined by Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, getting a view from the floor. Jonathan, how you doing?
Gentlemen, good morning. Happy to be here.
Are you tired from all that buying you did last week?
You know what? It was an exhausting week. When I got off the train on Friday, my head was spinning. The volume that we saw on Friday was incredible. The volatility that we saw during the week was incredible. Talking to a few of my colleagues, and I've been on the floor for 18, 19 years here. I can't remember a time that we would see such swings in the market, such one-way swings in the market like we did last week. And if you were on the wrong side of that, it got wrong very quickly for you. It was pretty aggressive moves that we saw there. So I think a lot of people are hoping that we get a little bit more stability to our markets and things kind of calm down a little bit this week.
I mean, is
When you
that
get those,
yeah,
I
go
was
ahead,
going to
Dennis.
ask, when you get those sustained moves in one direction, and I know because Joel and I both have a little bit of market making background too, if you get caught, like you said, on the one side of that, it's hard to wiggle out of those positions. Do you think the market makers, when they're going straight in one direction like that, get hurt?
I do. So the market makers have certain obligations where they have to be at the market a certain percentage of time and certain depth requirements away from the NBBO, the National Best Bid and Offer. So even if they want to get out, they probably there's some parameters where they can't or not allowed to get out. But yes, when they have positions that are somewhat sizable, whether it's a market maker, whether it's someone else, a day trader, it's just sometimes it's hard to get out of that position. And what's happened is that if you give yourself a limit of risk that you put on the table there, it seemed like on those volatile days that you were hitting and passing through those limits very quickly to the point where you missed a lot of your taking risk off the table opportunities.
I mean, do you think you think it's a healthy market? I mean, to see these kind of straight down and straight up moves. I mean, anybody that said, "Oh, it wasn't healthy," what happened in October, it was almost deja vu all over again. You went back down. I think this rebound was even quicker than the last. I mean, do you think the market needs to show some stability before it can make another leg higher, or you just this is the way it is, and if you missed it last week, you're going to be chasing this thing for into the end of the year?
I think this is healthy for our markets, right? So markets can't just go one way. When the market was going one way up, 3-4 months ago, everyone was saying, when's the top going to be, and what's going to be the sell-off, and how's this going to happen? And then in October, when we had this pullback in the market, same thing. Is this the turn that we've been seeing? Is this the sell-off that we've been seeing? So I think two-wave movements in our markets are very healthy, and our markets kind of have to find themselves, right? There's so many different factors that are out there that move our markets, whether it's headlines, whether it's economic data, whether it's geopolitical. There's so many things that make our market move. So these moves, I think, overall, on a macro concept, are healthy for our markets. But I think it doesn't really show the true breadth of our markets, the true health of our markets, when we see just such large swings. So, the market does need to move up and down, and prices need to find themselves. But it gets kind of out of hand, the types of markets, the movement that we saw last week. So I'm kind of chalking that one up to somewhat of a individual situation of last week. I don't think we're going to see anything like that coming again soon.
Jonathan, what do you think of this oil move here? Because we look here and this market was selling off because oil was selling off. And then oil stabilizes for a day or two. And we obviously have Janet Yellen coming. She really pushed the market, so the Fed was behind this. But oil is really not really rallied here very much. Do you think if oil starts to drift down here again, that the stocks will start to sell off again? Or is it just, it doesn't matter now and the stocks are just going higher no matter what?
Real funny, interesting concept. Oil would follow the market. And now the market is following oil. So we've watched oil, and we've talked about oil drop from 100 to 90 to 80 to 70 to 60. And all through these 10-point increments, many people, myself included, said, 80 is going to be the bottom, 70 is going to be the bottom, 60 is going to be the bottom. So we've drifted below 60. We've gotten a little bit of a bounce here, and I think everyone has now taken a deep breath. I think they feel that oil has somewhat stabilized here. We might see a little downward pressure, but I don't think we're going to get too much of a break in it. So I think people are somewhat on a short-term basis getting comfortable with the range that oil's in right now. But clearly, if it takes another move to the downside, I think people are just going to have to, whether they want to or not, follow it along. And that fear, that panic, is going to translate into the equity markets here. And also, as our equity markets, trade at highs, continue to get to highs, and trade higher and higher, it's much easier to hit that sell button when you've got some profits on the table. If you're looking at your month, your quarter, your year, it's much easier to hit that sell button than it is if you're in a downward performance. So I think that can also add to a little bit of downward pressure on this market as we get into the new year.
What do you make of ExxonMobil and Chevron, looking at two of the big ones here, basically getting back the majority of their losses here? And I just look at these two oil stocks, and they have held up very, very well considering where oil is. If you look at some of the little oil companies, they've really been murdered here as oil has went down. But Exxon and Chevron had held up fairly well, and they actually had a really great week last week with Exxon and Chevron both rallying over 10% here. What are your thoughts on these two individual issues? I know Nita was asking about ExxonMobil in the chat too, so you have any thoughts here on that these two stocks have been very resilient?
I mean, you look at Exxon, it's down 2.5% over the last 3 months. You look at Chevron, down 7.5% over the last 3 months. Yeah, these companies have made some pretty significant rebounds off their lows. They're big movers, and they're big companies, and it's kind of harder for them to move. And it seems like they've been able to weather this storm, so to speak. You've got some pretty strong downward momentum in this entire sector. And these have had the ability to kind of diversify themselves in different ways, and they're able to weather the storm. Now, whether they're able to be a leader now coming out of this, hopefully this bounce in oil here, it's too soon to tell in that. But I think if we see Exxon, get to the green over the last 3 months performance, I think that's going to have to, pull everything else up with it.
Yeah, Dennis is making an interesting observation, and I was just doing a little comparison here. Back in November, when crude was trading near $80 a barrel, you did have a bad month in it. 97.20 high, closed on the lows near 90.11, and now basically crude is over $20 lower than that. But yet, but you're trading above that November close. I mean, is it time to redo the calculations and how much these stocks are going to move in accordance with the ups and downs in oil?
I think it might be too soon to tell with that. We haven't really gotten fully comfortable with this move in oil yet. We're happy with the stabilization levels that we've seen now, but clearly this can move in any direction. OPEC and Middle East comments have a very far ripple effect on the price of oil and how it affects our major oil and gas companies here. So being able to retweak your numbers at this point might be too soon to tell. I am happy to see that Exxon has bounced back up above that 90 level. That par number was always nice to see Exxon at. We're going to have to see. We're going to need at least another month, I think, to get a real good feel on where oil is going to be and if these larger oil and gas companies are able to really stabilize themselves.
Jonathan, just while we're picking on Exxon and Chevron, I wanted to ask you about the imbalances there. Were you trading on Friday? Because there was some huge buy imbalances going into the close on both Chevron and Exxon. And both of these stocks ran basically the entire afternoon, probably on the backs of those large imbalances. And then they both gapped up at the close, both of these stocks, and closed very, very strong. Do you see sometimes on these quad witch days where you see actually these big moves, and sometimes they tend to give back these moves on the following Monday?
Yes, and let's also not forget that Friday was also a Russell reweighting and an S&P reweighting.
Right.
So we kind of and that happens 2 times a year. We have that in June when this whole thing occurs, and we have it in December. So it's kind of like a perfect storm of imbalances, volatility, and volume. What happens afterwards? It's interesting because usually we do get some pretty good movements afterwards, right? So there are funds that have to do some maintenance on their portfolios prior to this, and they start buying or selling leading into these large imbalance days. on a situation like Friday, we come in this week. It's a short week. It's a holiday week. I know a lot of people are on vacation. I think, talking to some clients, they've shut down their books so far for the year as far as making any real major moves to it. Clearly, if there's a big swing or big geopolitical issue in the markets, that they'll be able to do something. But for the most part, I think many funds out there have kind of taken a step back and somewhat happy where they are right now. So coming into today, I would have thought that today would have been a great opportunity to take some profits off the table. We're going to have low volume, means going to be higher volatility, nothing real major headlines coming out over the weekend, nothing that's really going to spook the market at this point. We've had a tremendous run-up in the market last week, so why not start to take some risk off the table as we get into these light trading sessions, right? We've got Monday, Tuesday today, Wednesday's a half day, nothing Thursday, Friday will be a non-event. And then as we get towards the end of the year, the last 3 trading sessions of the year might see a little bit more activity. We have clients that some clients do wait towards the end of the year and have some tax situation trades that they want to put on towards those last few trading sessions. But today's going to be a very interesting market to watch, just because of the fact that we've had this significant run up. We've had pretty good volume, We had fantastic volume on Friday. So to see this follow through today is going to be something to watch. And clearly, the futures have been marginally higher and have stabilized there.
Okay, we have Jonathan Corpina on the line, Senior Managing Director at Meridian Equity Partners. We only have 2 minutes left here, so 2 quick questions for you. Coming out of the chat, you think there's a good chance of the January effect and any potential candidates? Stocks that are getting beat up and year-end tax selling and may rally back in January, or any sectors?
I think if you're gonna pick out sectors, clearly we've talked about the oil and gas sector, basic materials there, and I think it's going to be interesting to kind of watch that play out. I think also looking at tech, clearly there's been a lot of mixed performance in tech. Look back over the 3 months, you've got Apple up 10%, IBM down 17%, Microsoft essentially flat. So tech, I think, has got a little bit of a mixed bag to it, and as we get into the new year, I think that's going to be one to watch, because if we start to see some parity in that sector there, some of the stocks that have been lagging to catch up with the others, we might see some momentum there. Also in the healthcare sector, we've seen a lot of M&A activity there. That's occurred over the last 6 months of this year. And some of those deals will be closing in the first 3 or 4 months of next year, and I think we'll start to see some significant plays there.
Okay, Jonathan, I also see you sit on various committees at the New York Stock Exchange. We talked with the SIBO. They're going to be expanding their hours of trading. Does the NYSE have many tricks up their sleeve for the new year?
Clearly there have been headlines recently about, ICE's overall idea of market structure, the maker-taker model, the payments and credits that go along with that. So I think what's going to happen as we move forward is that ICE has been talking with the SEC and with some other major players in the industry out there about defragmenting our markets, kind of bringing things into a tighter environment. Our market structure has expanded way too much. We don't need 60, 65 liquidity centers out there. We need to cut that down by 3/4. So I think we're going to start seeing some rules and regulations in the new year that'll help bring more transparency to our markets, which in turn will lead to better pricing for overall institutional and retail clients.
Okay, so you just gave me about another 15 minutes of questions. So
I was licking my chops.
I know, Dennis is salivating here, but we got to let you go. Jonathan Corpina, Senior Managing Director at Meridian Equity Partners, giving us a view from the floor. Jonathan, we love talking to you. We're going to have you on again soon.
Great, guys. Thank you. Have a wonderful day.